So I heard about it all week long from CEO after CEO. Tell us about supply chains. Where are we?
So two main takeaways, I think, from this earnings season. I've also been speaking to a lot of CEOs. And the first is that it is very clear that unit growth has been constrained by supply chain issues. So we'll talk a lot about tech, but let me talk about something very different from tech. Let's talk about pools. We love pools. We've liked them for a while. They've been big pandemic beneficiaries. Our pool CEOs, the ones building the pools and the ones supplying the pools, believe that unit growth could have been 50% higher without the supply chain issues they're facing. The supply itself and of materials and also the labor, because we're facing a great resignation in this country, and we're currently have the lowest labor force participation rate since World War II. So that's a big problem. So that all goes under unit growth is constrained. And then the second issue, the second thing that I would highlight is something that Mary said I think is really, really important. What she said is that, what I heard her say is that over the longer term, they're going to address this issue because they need to be positioned for growth. And I think what she means by that is that they're going to have to reshore some of this capacity and focus on supply chain resilience. And it is my view that actually Wall Street has probably put too much pressure on companies to optimize their supply chain. And we're going to get a much better balance going forward between that supply chain optimization and the resilience that's become very obvious that we need.
So there are a couple of issues there, I think. One is where do you get the materials from?
Yeah.
We relied upon some countries perhaps too much. We have to diversify on that.
Yeah.
The other is how much inventory we maintain. Just in time was very popular for a long time, very efficient for a lot of companies. Is this going to affect margins going forward? If we make those adjustments to supply chains, it may cost more money.
It will. And it will impact margins most likely, and we're going to have to kind of get used to that. But of course, we need the top line to come through too. And if people want to sell product, they need to have inventory. So again, it's going to come back to the balance of these two things. I do think there's an incredible investment opportunity, and our team believes there's an incredible investment opportunity in investing in the companies that are going to help reshore some of the manufacturing capacity of the United States of America. And so there I would point to, you heard all those people are dependent on chips. Chips fuel the world. They're fueling the technological advancement that we're seeing across all sectors. And so we can't be dependent on that just from another corner of the world. We're going to have to take some of that manufacturing capacity here. So we love chip manufacturing equipment.
So back when I was running a budget, a Cap Cities and a Disney, one of the questions I'd ask every quarter if we were down is this a timing issue or have we permanently lost this revenue for some point? Let me ask you that question about supply chains. When you see it down because of the units, as you described, is that demand waiting for when the supply is there, or could we lose some of the demand?
Yeah, so in other words, are people still going to buy pools and iPhones?
Yeah, exactly.
And I believe they will. And they're just going to have to wait a little bit longer. Now, of course, that requires us to have a reasonable economic backdrop, so that with that caveat, but they will. And in the iPhone space, if you had to wait longer, you're not going to switch to another provider. You will go out and buy that iPhone. So in some ways, we know that demand has been kicked into next year. But again, these companies still have to position themselves for the long-term runway of growth, and they will invest in the reshoring of their supply chains.
So, Katie, with just about every CEO I talked to, the supply chain discussion came right up with cost increases. And inflation. It raises the question, okay, as this lasts well into 2022, which it seems clearly it will, some people say even into late 2022, what possible effect might that have on inflation? Because a lot of the CEOs we've talked to said, we raised prices.
Yeah, absolutely. And so, of course, you want to be with the companies that have the pricing power to pass that through. I'd say three quick things. We are in the camp that these supply chain issues last throughout 2022. There's not an easy fix for them. And there's an investment opportunity on the back of that, which we talked about. The second thing I would say is that the inflation in the labor space is real. You and I have talked a little bit about this before, but we have failed to pass minimum wage in this country for many decades. We've now actually jumped over minimum wage because we've had to bid people back into the labor market. Now, the question that we have to really think about is that been a one-time reset in wages, or are we going to get continued upward pressure? And time will tell on that. But both of those suggest a higher cost structure.
And I wonder whether our wage increases actually are lagging, because if you look at the consumer price index, it is going up faster than the wages are. Wages are going up, but not as fast. Does that mean we're going to have to catch up at some point and we're going to have even more wage increases?
Well, that's how you get inflation, right? But it's very determinant on get that sticky upward pressure of wages going up, which will put, how that cycle works going forward.
But does that affect which companies you want to invest in the sense that some are more sensitive to that wage inflation than others are?
Yeah, so I would say right now we see a very healthy consumer. They're benefiting from higher wages. And we're seeing that come out in the data. If you look at credit card data, just to show you the health of the consumer and why we like the consumer, we have American Express publishes spending trends. Spending is up 36% versus 2019. So we've had a big jump in spending. The other thing I just want to say about consumer in terms of where we're focused, it's the millennial and Gen Z consumer that are driving a lot of that increase because they like experiences over things, and it's safe now to go out and have experiences. And they also have a higher risk tolerance around experiences than baby boomers. Baby boomer spending, according to American Express data, is actually down 6% relative to 2019. So we see health in the consumer that's repaired their balance sheet, has firepower, and we're very much leaning into those consumer companies that have pricing power and can benefit from a healthier consumer.
So out of left field, let me push you too far. Does that take you to the metaverse? And what Facebook did? Because if you're talking about millennials and experienced rather than purchasing, that sounds to me a little bit like the metaverse.
Yeah, so I love that you brought up the metaverse. Obviously, we have one of the largest companies in the U.S. decided to rename themselves this week to Meta, which is Facebook. Not everybody knows what the metaverse is. So very simply put, it's the idea of going from looking at the internet to kind of living on the internet. And for those of you at home who have young children, you probably know the Roblox company that allows you to build these virtual communities. And yes, this is driving consumption online in new ways, and that consumption is going to be maybe funded by cryptocurrency. So it is very much a brave new world. The one thing I will tell you, Facebook's excited about it. They've renamed themselves, obviously, and they spent $10 billion this year against that goal, and that spending is going to go up year after year. They've told everyone that publicly. But if you're worried about living online all the time, I still think it's a long way out until we get to the full metaverse. For now, we're still in real life, and if I had to invest in something right now, it would be the great outdoors over the metaverse, at least in the next couple of years.
The real universe rather than the metaverse.
The real universe, exactly.
Oh, wow. That's very retro of you. By the way, for those of us with small children, we hope that it's going to take a while, right?
That's true.
Because it's a little scary.
It is a little scary, too.